And good morning, everybody. Welcome to today's Monday morning mortgage update. My name is Sean Wohland with Waterstone Mortgage and the Wohland Mortgage team. So we are going to jump right into it. It's going to be a nice day here, nice week here in Scottsdale. It's supposed to rain this end of this week, so it's going to dip under 100. Thank God, man, that was hot last week. But we're going to look at rates right now to see if they're hot as well, because they saw a little bit of deterioration this last week. So I'm going to go ahead and share my screen. We'll jump right into it to see what's going to happen this week. All right, so this is a look at the 10-year bond. I'm sorry, this is the 30-year fixed, the 30-year bond. If you notice on this graph, last week we hit a pinnacle on our nice little ride higher on the Fannie Mae 30-year bond. And we lost, I think this was June 30th, we lost a little bit, and then from there we continued to lose almost every day. We gained some ground here, but jobs report, it just became bad throughout the week. And now we're stuck on the 100-day moving average on the Fannie Mae 30-year, but look at the 10-year, because that one has some room to go higher. And remember, when the 10-year goes higher, mortgage rates go higher. When the Fannie Mae 30-year goes higher, mortgage rates come down. But when the Fannie Mae 30-year goes down like this, we lose value. Unfortunately, rates get worse. So if you look at the 10-year, there's a lot of room for that to get higher. And with the Japan's interest rates going up, and with the inflation numbers coming out tomorrow, most likely we're going to see inflation go up tomorrow, which is bad for the bond market. And you'll probably see the 10-year rise, which would then go most likely up to this Fibonacci level. So we could see it go all the way up to 4.60, which would be a bad day for the mortgage rates. So this is a pretty weak level right here. So it'll probably go all the way up if we get a higher than expected inflation number. We could get a surprise, but the odds are against us. I'll go over that in just a second. Again, Fannie Mae 30-year, we're up against this 100-day moving average, but tomorrow will most likely pierce below this. Keeping my fingers crossed, saying a little prayer for the rates, but it's not looking like we're going to get anything good this week out of the inflation numbers coming out tomorrow. And I'll explain that in just a second. So let's jump into that so you can see exactly what I'm talking about. I'm going to share with you my screen again, a different slide. This is the June CPI preview. This is a look at where we are with inflation. Now, bear with me. There's a lot on here, but the headline, the current year-over-year headline inflation is 2.35. May, which is last month's reading of 2025, was a 0.08. Okay. June of 2024, which is the number we're going to replace, was a goose egg. It was 0. So a year ago in June, the inflation number for headline was 0. Now we're estimating it to be tomorrow to come into the 0.25 to 0.3 on the inflation numbers. Well, if you're taking out a 0 and adding in a 0.25 to 0.3 and then averaging the numbers again, inflation will go up. So the year-over-year estimate is going to be between 2.6 and 2.7, which is up 0.2 to 0.3. So inflation is most likely going to get up. Odds are very low that will be a surprise. The core is the same story. It's going to go up, although June of 2024, it was 0.09, but we're going to be replacing that with a 0.23 to 0.3, depending on how the reading comes out. So inflation will be going up on average tomorrow. So what do we do? Should we float? Should we lock? Well, if you're conservative like me and you want to protect your the consumer, protect your buyers, today would be a good day to lock your loans in. So the bias is towards locking in because rates are most likely going to get worse tomorrow. And it's unfortunate, but rates keep bouncing around between the 6.75 and 7.25 for the last several months. So it's going to be interesting to see how they land. Let's have a look at what the mortgage rates are on average. and I'm going to be pulling that up in just a second. Let's see here. Here we go. Here's a nice little chart. Bear with me as I share my screen again from a different slide. And now we'll look at what the average is across the board. So current average on a 30-year fixed is 6.83 is kind of where we're locking right now. This is pretty keep in mind, good rates, 30% down, primary residence. This is the average rate being locked. It is going to be going up, so the bias on rates is to go up. 15-year, we're at the low of the 6% range. FHA, we're in the mid to low sixes. 30-year jumbo, creeping up on 7%. And we've got ARMs having a little bit of a discount. Don't forget about our 100% financing available on a conventional loan. It is an adjustable rate mortgage, so you can get a rate between 6.25% and 6.75% on that product, depending on if you want to pay points or not. Great loan, zero down, conventional loan, great loan. So keep in mind. And then also VA, very similar to the FHA. So we're going to see rates most likely get a little bit worse this week. As we go through the week, hopefully they'll regain some ground and rebound. As far as what's going on this week on the economic calendar, we've got tomorrow's big consumer price index. Then we also have the producer price index coming out on Wednesday. We have retail sales and initial jobless claims coming out on Thursday. Building permits, housing starts coming out on Friday. So there's a lot going on. But I think at the beginning of this week, we're going to have more of a frustrated consumer than we will an excited consumer for what rates are doing. But I'm going to go ahead and lock a few of these in. Some that are longer term, I may float, but it is a good day to lock ahead of tomorrow's inflation with numbers. So we're going to be mixing things up a little bit. We're going to have some monthly Zoom calls that are going to go over a more specific and in-depth look at some of the mortgage products out there that can help you with your buyers get into homes. So expect to get some announcements on that. Otherwise, have a fantastic week, and we will be in touch. And try to stay cool out there and try and enjoy the rain. Hopefully, it'll come at the end of the week, and we will talk to you soon. Thank you again for everyone, for everything, everyone, and we look forward to doing business with you this week. Talk to you guys soon.